Hey guys and girls, my name is Umair Ali. Thanks for tuning into my new channel Brokenomics and to week one of this new playlist of videos which I'll be uploading once a week with updates to my stocks and shares ISA. So in the series I'm going to be including my thoughts and comments on company stocks or ETFs in my portfolio and why I'm personally investing in them. So as a premise to this new playlist, I've decided to invest approximately £1,000 every month and thought carefully why this may be a good time to start reinvesting into the market as it's generally trending quite low and is in a indicative of being in a recovery phase at the moment, which may present possible opportunities as we're moving to quite a different world now due to the current pandemic. I've decided to invest £1,000 into a trading 212 ISA. It's important to say at this point here, I am in no way affiliated with Trading 212, and although I was up until earlier last year a commercial banker for a very well-known but infamous bank, this is by no means financial advice, but just my opinions on companies and stocks that I'm investing in. So in total, in my portfolio, I have 2 ETFs and about 20 companies, which are not only companies that I either know, use personally, or understand their business model or their product or the service they provide, which, by the way, is such a key principle when investing. But stocks, through my research, I feel are in a good position to recover and potentially thrive in a post-COVID world. As such, these are all long-term holdings, and potentially I could do a video series on my Trading 212 CFD account where I day trade Forex and cryptocurrencies if there's any interest in that. So that was just a brief intro into what this series is about and how we're hopefully going to see some gains in the net asset value of the portfolio over the next 12 months. So let's just jump straight into it. I'm going to start off here with the Vanguard S&P 500 ETF, ticker symbol VUSA. So for anyone who's not familiar with this ETF, what an ETF is, this is basically a passive managed fund which tracks the Standard & Poor's or S&P 500. And this is a great ETF to invest in, not only because there's a broad diversification of companies, pretty much representing all major industries, but the VUSA ETF from Vanguard has very low management fees as well at 0.07%. So let's just take a quick look at the chart here and move it to 4 hours. What you can see, historically, it's been a great fund. There's been strong growth over the last 3 years and has a clear moving average trend upwards and a solid trend upwards as well, despite occasional dips. And if we're currently in a V-shaped recovery, we're roughly within a 6% margin of pre-pandemic levels. Now, I mentioned earlier that I'll be investing minimally into this fund for the time being, and that's because there is a lot of talk surrounding the S&P 500 currently, what I'm reading in news articles, etc., on forums. And there is a lot of talk regarding the S&P 500 being grossly overvalued at the moment, and I will be investing more definitely, but until maybe Q3, but likely Q4 and pushing into 2021, I'll be investing quite minimally or quite conservatively within the entire fund due to certain industries like commercial real estate within this ETF that have been hit very, very badly due to the lockdown. Most S&P 500 ETFs will be having this problem actually. They're exposed to so many industries. The talk about surrounding the overvaluation and how the effects of lockdown haven't necessarily completed a full cycle on this chart as yet. If you have a look at the 1 day, what you can see is there's definitely an upward trend here leading up until roughly February until the lockdown occurred, and then we see a massive drop, and then this is the V shape I was talking about earlier. There's record unemployment currently in many developed economies, and as we gradually move into a post-lockdown world, it's going to take time before the unemployment levels decrease once again. That's why it's quite uncertain. That's why I'm a bit hesitant to invest heavily into this fund at the moment. I believe that, there probably will be a V-shaped recovery. A W-shaped recovery, meaning it's gone up here, but it's most likely going to trend back down to then trend back up. And it's when it goes down to about 42, possibly even lower, or even if it goes down to about 44, I may decide to invest, a bit more into this fund. It's other stuff as well, like government bailouts can only go so far and last so long. These companies in high risk industries will be going through a really challenging time ahead. I'm reading very strong sentiment towards a potentially a W-shaped recovery as opposed to the sharp V we're seeing, and that's why again I'm postponing a substantial investment until around 6 to 9 months from now. But please don't get me wrong here. This is probably my second favorite fund. I'm a strong believer in diversification, and the VUSA ETF is a great all-rounder, with strong potential in the long term. And so that's why, in fact, the second ETF now that I'm going to be speaking about here is the one I'll be investing roughly £200 to £500 a month, equating to about 20 to 50% of the 1K monthly investment stake. So this is the Blackrock iShares Information Tech S&P 500, ticker symbol IUIT. I currently have 20 shares in this ETF, and it's an ETF that I believe will bode really well in the short to long term. So I have 20 shares so far, but we can't really look into too much detail, as you can see over here. And that's because the Trading 212 platform only made this available since the end of Q4, pretty much 2019. So there isn't too much historical data here, but what you'll see is that in the 6-week pre-lockdown period, let me just open the chart. In the 6 weeks, in the 6 weeks just pre-lockdown, we started at around 11.30, and it increased to roughly 12.80. So that's give or take 10%. And obviously that's not a long enough time frame to base an investment decision on, but what led me to invest in this fund is that it's heavily weighted within the tech industry. So what BlackRock have done here is take I believe it's 71 tech companies out of the S&P 500 and created a separate ETF for them. There are higher fees associated with this ETF, than the Vanguard VUSA. This one is at 0.15, but even with that, I believe it's in a good position to have higher returns over a short to long time period. So I've opened this page on the BlackRock website. This is the specific page for the IUIT ETF. And what you see here is that unlike a standard S&P ETF tracker, which will hold around 20 to 30% stake in the tech, soft and hardware space, this ETF is 100% based in this industry. If we look at the exposure breakdowns by sector, you can see system software, technology, hardware, storage and peripherals, data processing, semiconductors, application software, etc., etc., etc. And this comprises 100% of the entire fund. The top 10 holdings, the top 10 holdings make up around 75%. So these top 10 companies make up around 75% of the entire fund, which does have downsides to it. But these companies have generally performed very well historically and have typically fared better than other companies in different industries, especially during this pandemic. I also feel they're pretty future-proof. We've got Microsoft, Apple, Intel, PayPal, Nvidia. Nvidia's a great stock. I invest in it personally. Salesforce as well, Adobe, MasterCard, Visa. They're all in the top 10 holdings, with just Microsoft and Apple at around 40% of the entire portfolio's actual holdings here. At the time of making this video, we're still in a lockdown in the UK, and I can't just go to the shops to grab a new pair of jeans. So what do? I pick up my iPhone or go onto my laptop and pay for a pair of jeans on eBay using PayPal and my Visa debit card. And this example is just short-term thinking. For short-term thinking, for years we've been seeing the rise of your Amazons and eBays and PayPals. If a company doesn't have an online presence, they'll find it very difficult to make ends meet in this post-lockdown world, and that's why companies like Shopify have just become the most valuable company in Canada. It's why Amazon is as big as it is, and that's just how these tech giants are almost thriving, during this pandemic, in the retail industry, which is probably one of the worst hit industries since this pandemic actually began. But obviously it's not just retail. Google with Alphabet being the parent company, they're investing billions and billions into cloud computing. The pandemic has accelerated the adoption of technologies faster than ever before, and these tech giants who are the ones who are going to gain the most from it. So now, just briefly looking at historicals for this fund, if you just scroll up, we can see a 52-week low of 8.75 to a 52-week high of 12.84. This is obviously 8.75 is during the crash in March, and the 12.84 is just the value pre-crash. If we scroll down a bit, what we can see are the discrete values. The fund itself is only 5 years old, but even now, just having a look at the discrete performance, you've got a 24, 27 and 15% return, and at annualized returns we're looking at 17 and 21 over year 1 and year 3. I believe there's strong potential here in this ETF. On my charts that I've created using the Trading 212 web platform, I've outlined trend lines pushing this close to the mid-teens potentially, and higher potentially even next year, from the roughly 12 valuation we're floating at the moment. But would really like to discuss with you guys what your thoughts are on this ETF, or comments on this one if you didn't know about it, or anything else actually relating to my ETF investments. And if you feel I may be wrong in investing in just one industry as it stands, rather than broadly diversifying my interest towards the Vanguard S&P 500, which is obviously the top 500 companies. But yeah, that's pretty much all for today. I hope you enjoyed my quick walkthrough of the ETF part, at least of my portfolio. As I mentioned at the start, I'll be doing another video this time next week on my individual company stocks, and breakdown of the reasons why I purchased those stocks in particular. Plus some sort of forecast, my own personal forecast for those stocks moving forward. I'll also be including a personal promo link in the description of this video. If you sign up and deposit just £1 following my link to Trading 212, you'll get a free share worth up to £100, and it helps this channel out a lot as well. But yeah, that's all for today. That's just a quick glance at my other company portfolios, company stocks that I'm investing in. That is pretty much my portfolio as it stands at the moment. I'm just waiting for Monday to execute all the rest of these orders. I've got roughly £50 in the CFD account at the moment, and 960 for the account value for week 1. So let's see how this progresses over time. But yeah, that's all for today. Really hope you guys and girls found that useful. Please like and subscribe for more updates and discussions on investing and the markets. Like I mentioned, I'll be doing an updated video weekly on my portfolio, and it'd be great to discuss investments and stocks with you guys in the comments below. Cool. Thanks for watching, and see you next week.